All the content uploaded in this channel are purely for educational purposes, and one should always do own research or consult an authorized personnel for taking position in capital markets. I am not a SEBI registered financial advisor. Good evening, everyone. Welcome back to the channel Nifty Forecast, and I'm your host Lokesh. I hope you all are enjoying this weekend, Saturday, and I'm sure most of the beginners are always scouting for some interesting or legitimate data or some uh, master or a mentor who can give them a very honest and genuine guide to scale up to a full-time trader. I'm trying to bring in a little more insights for all the beginners from this series, that is stock market for beginners from Nifty Forecast. Here, what are we here for? We would quickly discuss something about stock markets from the beginner's perspective as to, how do we understand stock market and what are the limitations? What are the types of charts? What instruments do we have in the stock markets? What type of indicators do we have? What types of participants take part in this market? And what are the another category of participants there in the market? So let's quickly begin the topic and let's see if we can learn something from the beginner's perspective. All right. So we all are here. I'm sure, by the time you open this video, I'm sure you are fairly into trading, or I'm sure you must have already had a demat account in place that will enable you to trade. Right. So there is nothing much to talk about the type of companies because there have been a lot of categories of companies, sole proprietorship, LLP, LLC, private limited, public limited, whatnot. And we are not here to talk about all those types of companies today because that is not a part of the trading activity. But just to understand, if somebody asks you tomorrow that what is the type of companies that you trade in the stock market, you mustn't be blank. All right. So it is the public limited companies that we trade on the stock market. So those companies who are interested in uh, getting money from public via IPOs, they come to us through this route, demat account, and their shares will be with us in case if we buy them. So that's all about the company type that I want to discuss in this series of stock market for beginners. Then let's directly get into the trading area because if I am trying to tell you anything apart from this, I'm sure you will not be interested, and I'm sure you are not for the classroom study that you get to hear in the graduate level. So we talk about the types of charts. So how many types of charts do all of us know? So there is something called line chart that we used to see long back, or probably our parents' generation. If is not really into the technical analysis stuff. And how does it actually look like? Yeah, let's quickly look at it. Display, there is a line graph. Yeah, this is how it precisely looks. There is a line. You get to see only one information at any given point of time. So now that I have marked this chart in a day interval, this is a daily chart, and if we put a pointer over here, it is on this particular date, it is 10/3/2021. This is the price. It will either give close or open or high or low OHLC data. Right, so this is only one data pointer that we get in the line chart, and that was one reason this was not really useful for most of the traders fraternity. Yeah, I hope you all are with me on this. And what came in next? And this is also been used phenomenally from ages, especially those who are into technical stuff in our parental generation. I'm sure they must have used this charts, bar charts. This has OHLC data. What is OHLC? Open, high, low, close. All right. So the tick mark on the left hand side shows it is the open, and the high, no, needless to say, whatever high made is the highest point where the bar reaches, and low is the lowest point where the bar reaches, and the close. So these are the four data pointers that this line bar charts, I'm sorry, bar charts will give us. How about that? I mean, four data pointers in just one line makes more sense. Absolutely. Right. And what next? I mean, we always want more. We always want to get more information with limited whatever limitations that we have. And in that hunt or in that regard, maybe somebody must have invented a candlestick. Yeah. What is the difference between this bar chart and a candlestick? This speaks so much about it. I mean, it has got color coding, it has got wicks, it has got all the four data points, open, high, low, close, along with color codings that is visible for a naked eye. It clearly says, if we get to see a red candle, the price opened higher and closed lower. And if we see a green candle, the price opened lower and closed higher. So, it is very evident. Unlike the bar chart, we have to probably spend a fraction of a second more at every bar level to understand the OHLC data points. So that is one reason. That is one big reason this candlestick pattern has turned out to be a big boost for the market or for the technical analysts or the traders like you, me, and everyone. All right. So, why do you think these candlesticks are very powerful, very interesting to read, and makes more sense? Look at this kind of information where we have some long tails. I'm sure each of one of us must have played cricket, or for that matter, we must have at least used a ball, played with a ball, right? We hit it to the wall, it'll come back. At what pressure does it come? It is only based on the pressure that we put in towards the wall. So whatever pressure that we put into the ball towards the wall, it will come back with that same pressure. I think I am sure you all of us are with me. It is very simple. You hit a ball to the wall, it will come back. That is because of the pressure it has got when it touched the wall. So the same way, if you look at the logic behind why do we see the long tails here, 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 and here. So there is long tails. So this means the price when the price came to this level, this price point, there have been a pressure that the prices has to go back to this. This is something you need to believe it. In order to learn technical analysis as a beginner, this is something that you strongly need to believe and trust that there has been enough pressure from this point, price point, and that is the only reason why the price is closed here. All right, so that's a little about candlestick pattern. And now that the information that candlestick chart throws to us is evidently larger in volumes, it has got major acceptance by the technical analysis, and I'm sure we get to see only candlestick charts everywhere. Okay, let's look at the hybrid things. That is the Heikin Ash. Where is that? Heikin Ash. Yeah. So We get to see all greens, we get to see all reds. This is not what I definitely use. I wouldn't use all these indicators. Like I've told, I am totally against moving averages. I'm against SMA, RMA, RSI, ADX, all that. I only trust VWAP to some extent for playing intraday. Otherwise, I don't really look into Ichimoku, Bollinger Band, RSI, ADX, all this. All right. So how are these Heikin-Ash charts made? I mean, they consider some moving average. If the price is moving high, it will be a green candles, and if the price is going down on an average, there will be a series of red candles. So it doesn't make sense to me, but I'm just telling you that this is also something in use these days. I don't know why. And there is something Renko, line break. There have been a lot of chart patterns these days, but nothing really interests me. It is only the candlestick chart that makes more sense for me. So, how does this Renko work? I mean, let's say if we define a interval, like, for every 50 points movement, I want a small brick kind of thing. There will be a setting like that. And if the market moves higher by 50 points, there will be a green brick. And if the market comes down by 50 points, there will be a red brick. So that's how it works. And I don't see any point in this kind of chats as well. So let's quickly switch it back to the best of the breed, the standard candlestick chart. Okay, so that's a little about the types of charts, and let's quickly look at types of instruments. Okay, now we have demat account. Now we know charts, and uh, we have a trading terminal in place. What are the instruments available for a trader? For a trader, I mean, we'll talk about the type of participants like trader, investors, speculators, and all that later. But as a participant in the market, what are the instruments that you have available for trading, right? Yeah, so there are stocks. Needless to mention, that is the only reason, firstly, primarily for having a demat account to hold some stocks. Right. So there are obviously stocks, there are futures, options, ETFs, and these days we have currencies also. The most established currencies, futures listed for trading. All right, so these are the instruments that we get to trade on the trading terminal. I would request you to quickly dive into the topic of futures and options. I will not be explaining in this particular part of our program, but yeah, down the lane, maybe somewhere in next 1 or 2 months, I will be uh, showing you a deep dive information on what are futures, what are options, uh, at a basic level. I wouldn't take it an in-depth session, but yeah, I would request you all to have a quick understanding of what is futures, what are options, how long they exist, how to trade them, what are the margins required. I'm sure each one of you or the most of you must have already known it that the margins have really raised. I mean, SEBI really raised the margins these days. Back in 2016 or 17, if we had 80,000, we could carry a one lot of Nifty, but it is 1 lakh 65 or 67,000 that needs to be there in your demat account to hold the future contract for next day. So trading futures and options is quite a bit of risk. Please go through information, get enough information. Stay calm, stay composed. Only and only if you are controlled, please enter into futures and options. I would strongly not encourage anyone to trade options and futures readily in the first 2 3 years of their entry into the market. This is from my experience, I'm telling you, and it is totally up to you. You know, somebody learns the market quickly, 1, 2, 3, 4, 5, 6 months, or somebody is a slow learner, 1, 2, 3, 4 years, and somebody is even slower learner, 5 to 10 years, and somebody would never learn it throughout their life. So it is up to you. It is at your risk capacity, your interest, your commitment. You have to step into this futures and options. Right. So let's go to the indicators and understand what do we see, how important they are, do they really make sense, and what kind of indicators can we use for what type of trading. Yeah. So what is that? To start with, I would obviously start with a VWAP. That is only one indicator that I really love spending a little time on the intraday trading. So let's look at the future so that we have volumes. I mean, volume weighted average price is what it takes to for a VWAP. So if we don't have volumes, now that it is Nifty 50, index doesn't have any volume. So it is only the futures which has volume information. And let's open the May future, and here we are. We get to see the volumes here, and let's quickly see VWAP. VWAP indicator is already applied in this chart, but we don't get to see why, because it is purely an intraday indicator. And if you change the time frame to daily, monthly, weekly, you will not get to see any VWAP. It is very simple. So what do? We switch to 1 min. Yeah, let's see what is here. Lot of candlesticks and one red line. What do we do next? Let's quickly do a 3 minute chart. A 1/3 less and number of candles is what we get to see as compared to the 1 minute chart, obviously, because it is a 3 minute candlestick chart that we're seeing. And this is not that clumsy. I mean, we get to see a little okay kind of data. We will be able to understand a little about what market is saying with the candlestick chart and VWAP. And let's switch it to 5 minutes. It is even more clear. Yeah, in 15 minutes. Wow. Yeah, isn't it really awesome? We get to see a fair enough idea. But yes, whether I choose 1 minute or 3 minute or 15 minute, how does this make any difference to your trading style? It is only you who know the best, because I don't use any of these indicators. I use open interest or option chain analysis to trade Nifty, and I don't pretty much trade anything else. I invest in other stocks and I trade only Nifty or Bank Nifty. It is very clear. So, so this is what VWAP stands for, and switching time frame is just a relay for your eyes and your mindset. So end of the day, whatever indicator you use, it is absolutely you who must be very clear with what kind of time frame you are confident with to trade. All right, and it is you who has to decide whether you want to play intraday, and if it is intraday, what kind of time frame you use, what indicator you use, and if it is positional, what indicator do we use, and what is the time frame, is it daily or weekly or monthly? So yeah, think about it and make a wise decision every day, every trade. No trade is a trial. All right, every trade is a controlled and a planned activity for me. That is how it has to be. Otherwise, you will be a big failure throughout your trades. Right. So that's about VWAP, and there are a lot of other indicators like moving averages, SMA, exponential moving average, simple moving average, ADX, RSI, Bollinger Band, Ichimoku's, and all that. I wouldn't want you to take I mean, take you deep into those indicators as well, because those doesn't really make any bit of sense to me. So I request you to quickly, Google it and try to understand a little about RSI or EMA, SMA, ADX, BB, Ichimoku. I'm sure we will be doing a series of videos or a program where we will deeply dive into analyzing all those indicators and uh, giving you an overview how you can make a better use of those indicators. So that's a little on the indicators. And what do we see next? It is the types of participants in the market based on activity pattern. So why did I specifically write based on activity pattern? Because there are a lot of variety of traders, as in I want to do intraday on Nifty and I want to stay invested with stocks like Tata Motors or ITC or SBI, HDFC Life and things like that. Right. So based on the kind of activity I do, I would want to clearly mark those participants with the name. One is investor, right? Investor is somebody who will identify some stocks based on the fundamental research. I hope everybody does the fundamental research for investment. And yeah, the modern or techno analysts or the technical analysts use the chat patterns also. That would also make sense, because earlier, back in our parents generation, while they used to trade, they would always used to look at the quarterly report or annual report, and based on the performance of the company, they just used to take positions, as in they buy some shares and keep them in their bucket and ensure it is going somewhere, and then they will exit. Right. So that was a kind of analysis or just a research they used to do those days. But I don't really think just studying uh, the annual reports or quarterly reports of those companies is of any help, because there is a lot of speculation in the market. So market has no rational, it doesn't have a mind or a heart like you and me. So so that's one set of participant, that is investor. And the trader, so trader basically is somebody who trades contracts, not the stocks. But yes, there are also traders who trade stocks intraday, but I wouldn't deny it for the fact. But yeah, for me, a trader is somebody who trades futures options contracts. Only then I would call him a trader. Right. So the trader generally spends his time for probably 1 minute or 5 minutes or 15 minutes or a maximum of 3 months. And beyond that 3 months, he doesn't have any option to stay back in the market. Or rather, he is not called a trader if he's staying more than that 3 months. Right. So that's a quick difference between investor and a trader. Right, but speculator, what is this category of participant? Speculator is somebody who punches hundreds, thousands, lakhs of orders, has a large sum of money, who has high frequency trading setups available for his system, and he will just punch in trades. And mind you, he is the one who is responsible for the kind of movements that we see in the market. Yeah. So if I had to show you what is a speculator, let's open the market depth of any company. We get to see bids and offers right here. So we get to see a total number of bids and offers, which is a very insane number. I mean, the quantity is really insane for a retail level player like you and me. But those numbers are nothing but the numbers created by the speculators. That is what I see it for speculators. Right. So that's about the participants based on activity pattern. And what is the another set of participants based on their identity? Yeah, DII, FII, Pro. Very simple. Domestic institutional investors, foreign institutional investors, and the Pro, proprietary desk traders, like Zerodha has a proprietary desk trading system, or any other broker for that matter must have had a proprietary desk trading system. So these are those guys, who had the high frequency trading, established systems. So these are the kind of participants based on their identity. And these are the participants who will be whose data will be visible end of the day that we discuss in every post market report, if you have noticed. And if I had to tell you why do I trade only Nifty, it is very simple. There are only two major index that trades in India, not like Dow and Nasdaq. They both trade contrarily, as in one of the exchange might be in green and the other exchange might be in red. So that's very high probability of contra trading, contra movement in those exchanges. But unlikely in India, we get to see Nifty and Bank Nifty hand in hand. Just that the aggressiveness differs, but otherwise the direction will be more or less the same thing. So if I go look at the FNO participant wise data, I get to see index information readily available. And if I had to look at the stock level data, there are 200 plus contracts, 200 plus stocks being traded across this platform, and I will not be able to demarcate anything. Whereas the index is only true indexes that we trade day in, day out. So it is fairly a very clear understanding that we get to know from the data that NSE publishes every day. So that's the reason why we trade Nifty only and nothing else on an intraday. All right. Yep. So what do you think, we are here in this channel. We are here in this channel. I mean, from this channel, I would want to emphasize the importance of data, data engineering, and I would also want to show you day in and day out how interpreting the data is important for making right decisions in your trading plan every day, not just one day, every day, and a swing trade as well. So it is very important to have right data and right interpretation. I'm sure in the last 1 week of videos that we shared, it is very evident that the data that we were reading absolutely right way helped us achieving success every day, almost every day. Right. I'm sure each one of you can go back to our channel. I have already posted one live trading call as well as a part of the educational promotion. Uh, and it was absolutely right. And in fact, we predicted the market absolutely right almost in every video if you look through it closely, and that is only because of the data engineering. I'm sure you must have not seen me using any indicator, absolutely any indicator in my charts that I display. Right? So let's game on, guys. I mean, I want you all to stay with me for next 6 months to 1 year, and I am sure I will be able to get all of you to some standard where you trade confidently. So why I used this term trade control is one can always be controlled only when they are absolutely aware of the system. You drive car, bicycle, motorcycle, and what do you think you are doing? You are absolutely controlling those machines, be it a cycle, motorcycle, or a car. And in the same way, I want my followers to be absolutely in control when they trade. And when do you think that is possible? When do you think you ride a bicycle in control? When do you keep the motorcycle in control? When do you keep the car in control? It is only when you learn and master the art of controlling it, right? Go back to your early days. How did you learn controlling a machine? Get into it, try to understand and relate it to the market. How do you think you can understand the market? It is only if you have enough data, enough information, and interpret it the right way and stay calm, stay 100% contented with the kind of interpretation you have, and the next day you will be able to be on the positive side of the trade, I bet. Yeah, so that's about it for the today's session on stock market for beginners. I request you to share this channel information with your traders fraternity. And in case if you have any questions, please comment it in the comment section and support me. Please do subscribe this channel. Thank you so much for watching this video. Have a wonderful weekend. Bye bye.